Hey everyone, I'm reviewing this book again, Trend Following: How Great Traders Make Millions in Up or Down Markets by Michael W. Covel. Because the last recording for some reason had very poor sound quality, I think that's still up there. It's the video directly beneath this one on the channel. Now, this book is, let me tell you a bit about the author if you haven't seen the other review, because it's the second book of his that I've reviewed on this channel. I think he's one of the best writers out there when it comes to writing about trading and even learning to trade, or just the history between us, the history behind a certain type of trading. Basically, that trading is trend following, which historically is and continues to be the best type of trading. The best type of trading because followers less than others, they don't go bust more than others, they make more money. There's a book that came out recently about Jim Simmons, who's a trend follower as well. I think it's called The Man Who Mastered the Markets or something. Now, Simmons has a track record, average returns of 60% a year, annualized 60%. That's well over double what Warren Buffett's track record is. Warren Buffett is richer because he's been doing it for 80 years or something. So obviously, if you keep compounding that long, you make enormous amounts of money. There was a book, I think it's The Psychology of Money, which is also reviewed on this channel, in which the author talks about if Jim Simmons had been trading for as long as Buffett's been investing, Simmons would be worth something, like $1 zillion. It's something insane, something unimaginable. His wealth would make people like Bezos look poor. Absolutely unfathomable wealth. But getting back to the book, so I think this book is one of the best books ever written on trading, because what it does is it dispels a lot of the myths about trading. I said I was going to talk about the author, and he's a guy who wanted to be a successful trader back in the 90s. So he went for a couple of job interviews at places like Solomon Brothers. He didn't get in. He went down. He saw these massive football pitch sized trading floors with hundreds of people working there, all super smart people with PhDs and everything else. How's a normal person meant to compete with that? Well, the fact is they don't have to, because one of the things you'll learn if you read this book from all of the trend followers, and we'll look at some of their track records in a minute, is they don't really know much about the markets they're trading. How can that be? Well, they don't need to know much about the markets they're trading in terms of, is the price of oil going to go up because of demand and wars and what somebody in OPEC said and what's happening. All of that is irrelevant bullshit, because what they trade is they trade the price. If the price is going up, you do a certain thing. If the price is going down, you do a certain thing. You allow a certain amount of risk. One of the things you learn about in this book is money management. It doesn't matter how you trade. If you don't have money management, you will eventually go bust, because human psychology dictates that you partake in behaviors which will lead you to go bust. And one of those is the fear of losing a profit. So once you got a little bit of profit, I got to take the profit. That profit you took, that profit could have turned into that much profit if you'd left it. And if all your other trades were losers, that one trade can see you winning. There's track records in here which show you, for example, traders who had 11 losing months in a row, but still ended up 30% up for the year because they had one winning month and they let that trade run. Some of the basic rules: you have to exit your losses straight away, which is once again counter to human psychology. You lose something, you lose a bit of money on a trade, you invest in a stock, for example, or an oil or another commodity, or a forex pair or something, and it goes against you, and you think, oh, if I just hold, oh, it's going against me. I tell you what, let's buy more because it's cheap now. No, because it could keep going against you. So you have to get out, but that's counter to human psychology. Humans hate to lose money. He cites some experiments in there where people, if they've already lost money on something, are more likely to spend more money on it than if they hadn't lost it in the first place. It's crazy. But trend followers understand this, so they have rules, they have systems, and their performance over the long term, and I'm talking decades, blows everybody else out of the water. All these scam artists, these forex kids, I'll teach you how to trade forex. Why only Forex? Why not all the other markets? If your rules work, why not all the other markets? All markets go up and down, don't they? You know, with their hired Lamborghini or their dad's car in the background. Oh, I made millions in the Forex market, and if you just pay me £3,000, I'll show you how. Bullshit. You didn't make any fucking money in the markets. You're all full of shit. I know, because I've worked for some of these people until I found out what scammers they were. In fact, I've worked for the biggest one there is. No names mentioned, of course. So this talks about the psychology, this talks about the rules, this talks about all the misconceptions about trading. Like I was talking about earlier, you have to, work in a massive glass tower somewhere. You have to have, you have to be one of the big banks. It's super complex. You have to be super brainy. No, you don't. One of the brainiest hedge funds ever was Long-Term Capital Management, founded by Nobel Prize winners. They were that smart, right? And it went completely bust. It lost billions because the rules they were so certain about that worked for a little while and made lots of money, and then they were smart, so everybody thought, "Oh, I'll put money in here." Well, when they didn't work, they were fucked. Bang! Everything was lost. There's a quote in there somewhere that says they were called Long-Term Capital Management. With one Nobel Prize winner, they had a chance. With two, they were doomed because they thought they were so clever that they couldn't be wrong. In the markets, if you read this book, you realize that you're going to be wrong a lot of the time. It doesn't matter if you're right or wrong. What matters is you're making money. You have to be able to accept that you're wrong. I'm speaking quite far. I love this book. I think this is the best book on trading. In fact, Covel's stuff is generally brilliant. Here we go. Larry Hite. Now, Larry Hite is a guy who was born with learning difficulties. Not that smart, but guess what? One of the most successful traders out there, and one of the richest as well. If that's how, it's what it's got to come down to. Trading is about making money. It's not about being smart. For my staff at Hite Capital, Michael Covel's trend following is required reading. Says it there. I'll read you some from the back as well. Here we go. Trend following will replace Market Wizards as a must-read Bible for a new generation of traders. Jonathan Hoenig, portfolio manager, Capitalizing Hedge Fund, LLC, Fox News contributor. I'm talking about the news. Yeah, all these people on the finance channels buy this because and so has said this and blah blah blah. If you followed their recommendations, you'd be broke. There's a great quote by Jesse Livermore actually, which is Wall Street is a whorehouse, the stocks are the whores, and the brokers are the pimps, and good men go there to throw away their money. There's a great one in there as well about you have all these pundits, these analysts, etc., who say, I know that this stock is going to go up and it will go this high by the end of the year or whatever. So if that's the case, why don't you remortgage your house and put all the money in the stock? Because they don't know. They don't. They just want you to buy it. That's how they make their commissions. It's all bullshit. Whereas this book is not. And if you really want to learn about it, I think it's absolutely brilliant. I think I said in my last review I give this 12 out of 10. I still do, but obviously that's 10 out of 10. And I read some of the actual data, the actual performance numbers for the traders profiled in here and talked about in here. There's another book this guy wrote a bit later after the 2008 crash, and a lot of the traders in there, trend followers again, in 2008 while everyone was dying and losing money, they made 80%. So, and guess what? They weren't experts in the markets. The other thing you'll learn about trading in here, and generally just about maths, is you don't have to be right all the time. So all these, once again, the scam artists saying, "Oh, I've got this trading system that's right 90% of the time," and if you just, send me 2,000, whatever it is, the average price for one of these pointless fucking workshop seminar weekend seems to be about £2,000-3,000. Unfortunately, I know people, a friend of mine, who spent about 10,000 on this bullshit. So anyway, it's you don't need to be right 90% of the time. If you're right 10% of the time, but your winners are 10 times bigger than your losers, well, guess what? You still win over the long run. You have the edge. The edge is what the casinos have. This is why casinos make so much money. And you can too. It's about having the edge, having that positive expectancy. So if you're right 50% of the time, and every time you're wrong, you lose £1, but every time you're right, you make £1.50, well then you're still going to win. Okay? Anyway, done. I think my last review on this book was very long as well. Hopefully the sound quality is better on this one. So apologies if you watched that one and wondered what the hell was going on with the sound quality. And yeah, there you go. Trend following, how great traders make millions in up or down markets. Michael W. Covel. And some of these traders, these great traders, they're not in the big towers. They're not got 1,000 people around them. They're not doing all this research. They spend an hour or so trading every day. because they've worked for decades to get to that level in most cases. All the noise they don't need, all the Bollinger Bands, all the Elliott wave theory, all the this setup, that setup, technical analysis. That's another great one. You can go and pay a few £1,000s again to learn a bit of technical analysis on a fancy screen somewhere. You can just buy a book for $12.99 and do the same, But apparently, this trading guru is going to. The best one I heard was a guy who'd done one of these weekend courses and realized it was just a waste of time. And then he met another guy, a quite savvy electrician, who was paying the same con man who ripped him off £8,000 for private tutoring, private coaching. I wonder what that involved, because I doubt the guy who gives those courses has actually traded. But it's a 10-minute plus video already, so I'm going to stop there. I get quite infused about it when I talk about this, but yeah, it's a great book. I recommend it, and I'll probably review the other book of his I read on the weekend as well. All right, thanks.